Hello traders and welcome to another candlestick analysis video of mine. So today we're going to be looking at the shooting star candlestick, and the reason we're going to be doing this today is because I had a YouTuber mention to me that he wanted a more in-depth look of how to trade candlesticks, and I thought that a great example today would be to look at the shooting star and how it can be a great place to sell after you've bought. So let's go into the shooting star and how to trade off of it. The first thing you need to see, like it says here, is the uptrend. You cannot have a shooting star at the downtrend. That would actually be something called an inverted hammer. And then you also want to see the upper shadow to be at least twice as big as the real body. So what this means is that this upper wick should be twice the length of this body right here. The longer this tail is, the stronger this candle is. Also, the real body, this is the body, bullish or bearish, but it's much better if it's bearish. Here we have a bearish candlestick, which is much stronger, of course, than this was a bullish candlestick. And look something like this kind of. I know this is a bad example, but something like this that climbed up a bit. It's much better if it has a high tail, uptrend, and then goes down. So let's get started. So the first thing I want you guys to do is to spot at least 3 shooting stars in here that you could have sold at. And I'm about to tell you guys also how to incorporate volume into trading those candlesticks. But first, I'm going to give you guys 10 seconds to find those 3 reversal shooting stars. Okay, so time's up. Here they are. This is 6 shooting stars that I found just on this screen. And what we're going to do today is analyze volume in trading candlesticks. Because what the YouTuber that I had mentioned to me was that candlesticks are great to trade and they make a lot of sense when trading them. But what you need to also do is look at other factors when trading them. And what we're going to look at today is volume, and especially the 5 weighted moving average of volume. So basically what that means is I've attached a moving average of 5 to the volume here. You would just go to here, go to volume, and type in 5. And what that will do is it will take the volume of the last 5 candlesticks and it will calculate an average, and then it will plot that and continue to do that. So what you need to see for this to be a proper reversal is a spike in volume. And to acknowledge a spike in volume, you need to see it be above or on the average volume line. So the first one we see here is quite textbook shooting star, as you can see right here. We have price failed to make a new high, goes down, and then it goes down from around 202 all the way down to 197. And then you see some pickup of bullish momentum. And then what we see here is another spike in volume with this shooting star right here. It's a bit smaller, and this one actually closes bullish. But you can see that this is above the 5 weighted moving average of volume. As you can see, it pops up above, so it is a valid signal, and price goes down, and then here. And then we can see that this is probably the best example I could find. These two are, this one and this one. So basically what we see here is a very big spike in the volume of this shooting star. And though this one did close bullish, the bearish engulfing candle after it probably would confirm that we're going into a downtrend. So if you were in this spot and without 20/20 hindsight and you had seen this candle print, and then you saw a bit of this begin to happen, and you see that the volume is twice as high as it was on the average of the uptrend, that volume is just spiking here, you know that the bears are beginning to take control and the price is likely to move to the downside. So this would have been a fantastic spot to sell and probably would not have been that hard to spot. Here I have a double candlestick pattern, as you can see here, and it's also a bit of a tweezer top, but also it's 2 shooting stars in one. This one a little less so because of where it closed, but this one is a shooting star. And you can see that also here we have a spike in volume and price goes down. So if you had been here, seen this strong bullish momentum, and then seen this, you'd probably want to get your money out and buy again at support. And that would have been a very good trade. You probably also could have done the same here and created a nice profit. If you had seen this, bought here around, and then sold here on this very bearish sign with a spike in volume, and then wanted to buy again at support at 199, you could have bought at $1.99 right here and had a fantastic profit, sold at the double shooting star you have here, and then when price hits support a third time, you could have bought here and then gotten out with this final shooting star candle right here that also has a spike in volume. So if you guys want to take two things away from this video, what you want to note is that a shooting star, again, has a tail that's much longer than its body. And what you need to see is to look at volume, plot a moving average, preferably about 5, and then see if you can see volume spike through that moving average. And if those factors check out, you probably are going to be in a bit of a retracement or a downtrend, and that will give you fantastic spots to buy. So that's going to be it for the quick video on some candlestick analysis. I will continue to upload my candlestick challenge practice, and if you haven't seen that yet, I highly recommend you do. But this video, again, is going to start to incorporate more aspects into trading candlesticks so that you can do it profitably. Thank you guys for watching, and see you guys in the next one.